Yes, I think we are finally live, and I'm not sure if we were live before. So yeah, apologies for any inconvenience. We are trying it the first time, and so hopefully it will work this time, right?
Yes, it should. It should work this time. Thank you guys
Okay.
for having Monday morning. You know, with enjoying our coffee, we're having some technical issues. We greatly appreciate your patience with us this morning. So with that, in reading your article, I thought there were some really great questions that I would like to ask you and kind of highlight your expertise, your knowledge of this field. So, you know, could you share with us, tell us more on the ways lenders can reconsider how they assess business loan applicants today, especially during these interesting times. What would be a good way for lenders to reevaluate credit risk from your perspective today?
Sure. So traditionally in business lending, the credit scoring was relying mostly on financial information and on some non-financial characteristics. So the assessment of the financial would usually rely on ratio analysis of the historical financial statements, which would be submitted by borrower. On the qualitative non-financial side, we would look at the business owners' profiles. We would analyze business plans. We would basically see the history of this company with us as a lender or with some other lenders. So, but the whole essence of the financial analysis was to see how stable and efficient the performance of the business was in the past. And then using that information, we would try to predict their creditworthiness in the future. During the economic crisis, as we all understand, the very basis of this analysis, the stability, the historical stability becomes irrelevant. So whatever happened in the past, it can't help us anymore to predict the future accurately. So that's why we need to measure the financial indicators in a different way, more dynamically, more often, and we need to compare them to the historical results. But we need to be more proactive, more up to date, and we need to look at the existing picture, comparing it to the past, but not relying on the past too much.
Thank you very much. That's great to hear. So in these current times, what I'm hearing you say is that a new approach, new visibility into potential loan risk could be a key. Would you agree to that?
Yeah, absolutely. So it becomes very important to increase the frequency of the data collection. So instead of just doing it annually, we need to observe how the business coping with the crisis and how they're surviving and how they're performing in real time, basically. So we need to do it at least quarterly. So we need to take this financial snapshot on regular basis. Plus, on the qualitative side, we also need to look in more details on the industry analysis. We know that all industries were affected by the crisis, but not of them are affected equally. Some are in better position, some are at higher risk, like we know restaurants, retail, hospitality, certain business services. Some industries even benefited, like IT and pharmaceuticals. So we need to look at each vertical and understand what the impact is and how soon this industry can recover. There are all kinds of government programs to the industries which are essential for the economy. So it also the additional support increase the likelihood of a quicker recovery. So we need to look at the verticals. But we also, within the same industry, we need to pay more attention to the qualitative characteristics of the business, their management style, the efficiency of their management, their distribution channels. In my article, I refer to the wine producers who could have benefited from the crisis, from the COVID-19 pandemic, because the consumption of wine naturally increased, but only those who worked with large supermarkets were able to benefit. All those smaller wineries who supplied directly to restaurants and had tasting rooms, they could not take advantage of this trend just because all their channels were basically shut down.
Mm-hmm. So you talk about some interesting facts there, and we could argue that reviewing industry and understanding industry risk by segment is very, very important. As a fintech advocate, what would be 2 or 3 things that a fintech technology could provide a lender with an advantage today? So if I was to pick on, let's say, leveraging customer service from a fintech perspective, what would be some advantages that a lender could use from that perspective?
Okay, so it is very important to have the connection with your customers, to have connection with your borrowers, and to be able to make the application process as simple and as smooth as possible for them. So for that, we can help lenders to collect the data they need for assessment of the credit risk in real time through third-party integrations. And again, speaking of the credit scoring, the bank statement is one of the most valuable data sources of the information, because it we can get the real-time cash flow picture. So by working with companies like Plaid, we can retrieve all those transactional transactional information, and based on that we can do assessment of inflow transaction amount, outflow transaction amount dynamically in real time, like all kind of very informative characteristics, like last month average inflow amount compared to the 6 months average inflow amount, balance volatility, and so on. So it becomes extremely informative and very important during the crisis.
Gotcha. And have we invested in some development around understanding those statements, those debit and credit transactions that we can leverage with our platform?
Yeah, sure. We have very strong focus on using machine learning and AI for analysis of large volume of information. And as I mentioned before, since we analyze our customers' portfolios end-to-end, we have this advantage of seeing how different parameters affect the creditworthiness. So based using AI tools, we built very sophisticated models which analyze all kind of transactional data, firmographics, and they predict the creditworthiness of the business, but they also help us to send early warnings if something going wrong when the loan is already originated. So that's the future of lending. That's the future of the business lending. That's why we invest in AI and in building sophisticated credit scoring models.
Fantastic. One last question, and we greatly appreciate your time this morning, and we understand your business, but what role can a fintech play for lenders in this day and age of COVID-19 and economic stress?
So since we still experience the consequences of COVID-19 pandemic and many bank branches are closed, the financial services customers, they start relying more on online and mobile services. That's where fintech has advantage compared to the traditional players. That's why now banks and credit unions try to keep up with fintechs to provide the same level of service and to deliver digital, mobile, and online offerings to their customers, because when you have a choice, the majority of users these days, they would go for a digital option. So the fintech is growing, and we're happy to support this industry from a technology standpoint.
Fantastic. Well, thank you so much for your time this morning. If any of our LinkedIn brothers and sisters, lenders, you name it, have any questions or concerns, feel happy to reach out to us at Turnkey Lender. We'll be glad to address any type of questions or concerns you may have. Thank you very much. Have a great week. See you again soon.
Thank you.